start the recording. Okay. I thought you're not gonna come, Bella. It's like basic things, and you usually get bored. The basic things. I'm gonna just do the really basic things for a lot of newcomers. That's why I said, if you're interested, fine. If not, you can just do it. Because- oh. um, Okay, no, it's always good. It's always good. I myself watch my videos sometimes, and I'll cover a little bit. But maybe tomorrow I'll do it because I just want to show a few basic things right now. Because, yep. So let's. Uh, so the other thing is that in U.S. right now we have a mess here, and the whole market is holding on to that. That Trump plan or something like that. Going on. I'm not even watching it anymore. So it's just being a mess. I don't know. So okay, so let's get started here. Just want to show one simple thing before I start. I don't know where it is and how I'm gonna do it because my email. Okay. Um, there was somebody asking me that how to download this. So this is what I'm showing here is that see I mailed myself that package, the subscription package. And if I open my email, can I open it? Okay, here. Okay, so this is how you get the package in your email, and then you simply download it. Okay, let me remove this box from here. So yeah, I'm going to download here. Okay, so this is the downloading, and it starts. Oh man, I met. Okay, so it says save or save as whatever, right? You get a message. I'm just press the download button. It's a zip folder, right? And then I think I'm gonna save it, and then it says open or open folder. This is what I have is Windows 10. So if it's open folder, let's see if I can open folder, and then you see that it's right here, subscription package, right? So I'm going to copy that by right clicking over it and then copy, right? And then what you do is you go to your um, what do you call desktop. How many things I have open? No wonder my computer gets slow. Right? Desktop, and then I'm gonna right click again and paste. Okay, so this the whole package here, I already have it, so that's why it's saying replace the file in the destination. So once I have this here, you just paste it, and then you will see on your desktop, like I have it here. You see subscription package. Now all I gotta do is that double click over it, and you have this whatever it is in there, different folders, and you open each folder one by one and take the content, copy and paste in the proper folder. And I have the video for that too. Okay, if you follow the procedure, it's very easy. For example, this is Magic IB system. Double click. These are the indicators. These are the template, and everything else. So you can simply take it from there. But if you don't know any of these, that how to do open the folders, then I'm going to have to make a separate video completely because that's the whole line yard. But opening a zip folder is that just you copy the download, copy it, and put it on your desktop. Once you do that, double click and it opens up. Simple as that, right here. So you see the subscription package, just double click, and then you have a window here with the content in it. These are not zip folders now. This is simple folders. These are, and then you can just simply open them and then use the content, whatever it is, and you know, paste them into proper folder. This is as simple as that. Okay. Right, right. That's what I was showing because somebody was asking me that, that what do I do with the zip? How do, so I'm just showing a simple thing. This is involving Windows 10. By the way, I'm sick and tired of this Windows 10 now. I'll probably go back to Windows 7 or 8. It's messing up my computer. Yeah, Ted, maybe Windows 7, man. See, I'm trying to do some video auditing in the YouTube. I can't do it. It's just weird messages coming in, and then I give it to somebody else, and he did it fast. I thought maybe there was a problem from the YouTube, but no, it's not. It's my computer, and when I have everything, it says, update Flash Player. I do. I have it. I have the most up, but it's just not working. So it has to be Windows 10 or something. Anyway. By the way, this is a gold chart I made from here. That's gonna go up, and it's very nicely going up. But right now, as I was telling you that Mr. Trump trying to pass that bill, and it's a lot of people. The whole market is just waiting and trying to see. Today is Thursday anyway, so Friday is gonna just this week is not good. It didn't. A lot of pairs. Trust me, they didn't go my way, and I didn't have it. And yet, actually, to be honest with you, I so far I lost today. Not much, but yeah, no good trades today. Because I was expecting a down move in EA and G, and they went up. So I'm waiting and watching that if the direction is going to change completely, or it's just an up move which will turn down again, to the downside. But sometimes that happens. No big deal. Okay, every day is not Sunday, right? Okay, anyway, so let's get to the analysis, the basic analysis. So the Forex or any other market, any other instrument as far as you are working on the MT4. There are other platforms which I don't cover, but MT4 is the one, most used and, I think the easiest one. I don't know, but maybe. So there are only, the market moves because of the two things, actually because of the one thing only. Major, and then you have so many things within that. The market moves, the price move, these charts move only because of the news that we get from all over the world, different financial aspects, right? And there are too many. So basically, I would just say stick to the news, simple news. This news thing moves the market or the price, anything. So a news coming out from US, it will affect the USD. Now the USD is moving up or down, and USD involved in 7 pairs. So they'll all be affected, right? Some will go up, some go down, depending where the USD is. USD on the left-hand side in the pair, USD on the right-hand side in the pair. For example, Euro USD, Pound USD, and Aussie USD, Newsy USD. USD is on the right-hand side, and a couple of pairs, like 3 pairs: USD Franc, USD CAD, and USD Yen. USD on the left-hand side. So, if these 4 goes up, those 3 will go down. That's how it is. Okay, opposite. Then the technical analysis comes that if the price is moving, when to make an entry in that direction, wherever the price is going, and how long to hold. Where will this move end? Whichever is started because of that particular news. Today, for example, we have NFP, and NFP news comes with good for the USD. USD will get a strong, and all the pairs can start dropping. Right? Euro USD, Pound USD, Aussie USD. But the question is that should you close if you are positive 20 pips, close it. 30 pips, 40, 50, 60, where do we close, right? So where to start and where to close is what we do technical analysis to find out, identify these points, the starting points and ending points. And for that, we have different tools, okay? So the number one, the most easiest tool is that what you do is, for example, you open a chart, Forex major, let's say Euro USD, and then you open a monthly chart, which is the biggest time frame we have, and you have your own templates. The different. I have the plain template, which gives me just plain chart, right? So this plain chart opens up in front of your eyes, and then you can see what you see is that highs and lows and highs and lows. Price goes up, then comes down, goes up, and comes down a little bit. And then if the price is making higher highs and going up, even though it comes down, a dip a little bit and then go up, then we call that a long trend, right? And if the price is doing the opposite, like lower lows, then we call that a short trend. Like trending means it's dipping, but it's just going, making the higher high and then keep going to the upside. It's a long trend. And then if it is doing the opposite, it's a short trend. While doing that, higher highs, it makes the turn, and wherever it makes the turn, this is the highest point here. This is the lowest. Then it goes up again, it makes a high, and then makes a low again. It dips. The reason of dipping is, if I'm going too fast, let me know, okay? Because I want to cover a lot, so I'm just going, too fast. Dipping means profit taking. When you hit the target, when, for example, there is something very big, very obvious, then obviously 80% of the traders are looking at it, right? It's very obvious. Everybody knows, and everybody is talking about it in different forums and this and that. What's your target, buddy? Where are you going, buddy? This is the number, man. I'm going to R3, daily pivot, R2 maybe, right? R2. Everybody's talking about R2. So the R2 becomes 80% people's target. And as soon as the price gets to the R2, they close their trade. When they close it, the price stops dropping, right? Then whatever the area we broke before, the price dropped, and usually people think that, okay, this is a support, right? And then people start buying again if there is no reason going down all the way. Okay, if there is no news, the opposite direction, then we will continue doing this game, finding support at the last high, and then going and then breaking the resistance to the upside, making another higher high to another some previous target, previous highs, right? Or some other trend line or something, and then take profit and then dip again. So we just keep doing that. Now the question is, you dip and then you go up. Then again, where do you go and how far are you going to dip? So some people have made some, they did some, a lot of research and then come up with a couple of studies, commonly known, we all know, like the basic number one is Elliott wave. And basically that's the only one that we have. And then out of that, somebody made these harmonic patterns, which are nothing but the Elliott wave. And the people that cannot understand Elliott wave or things that they are hard to understand, they will usually go and then play with these patterns. These pattern means certain Elliott wave in a certain way. They gave that pattern a name instead of counting the Elliott wave or the measuring and all that. And that's what the harmonic pattern is all about. Harmonic pattern is nothing but Elliott wave, just a different name and different aspect of looking at it. That's all. So these are the two studies, right? These are the studies. But like I said, the very, very basic is what we call is the highs and lows with trend lines, right? What are the trend lines? When you are doing something in harmony, like you making a higher high to a certain level compared to this high, or a certain distance, right? Let's say for you going 3 feet high and coming down 2 feet, then making 3 feet high, then coming down 2 feet, right? So you making this 2 feet low, this 2 feet low, this 2 feet low compared to 3 feet, they are in equal length. When they are in equal length and you draw a line, that's called a trend line. And every low will be hitting that, right? For example, if I draw this here and, like, for example, this and this, right? What happened? Okay, so now basically everything becomes harmony, highs and lows and the trend line. If you go by highs and lows, you don't have to bother with the trend line. If you go with the trend lines, you don't have to bother with the highs and lows because they are, uh, I don't know, symmetry or congruent. I don't know what to call it in English, but they are similar. For example, see, this is the trend line. The price goes up here as well as it is touching this high too. Okay, so this is the high because everything is calculated. So this is, it's a little bit off, but it is, this is the high and also this is trend line. They're both coming together. You will find this phenomena most of the places, that you will have a support, horizontal support, as well as a trend line, cutting each other. And that area becomes very powerful. Okay, so basically as a support resistance and trend lines. Channel is nothing but, you take a copy of the trend line and then place somewhere else, and then the price goes and hit that area. For example, this one, this would be the channel. You can just copy and then paste, on the lows. You see how nicely this line and then the price comes in, just touching the line and then holding here. So it has this thing. It's very hard to understand and explain, but yeah, you should draw the channels all the time as well. So this one, the number one study, the basic study is, it involves three things: highs and lows, these highs and lows, and the trend lines and the channel. Simple. Okay, you keep drawing these highs. I use this tool basically. Okay, you will get trades off of these areas. Okay, now just keep drawing all these highs and lows, and you will see, amazing things. You see that? How easy it was. Not often because it's a monthly chart, but the same thing happened to a 5-minute chart as well. 5 minute, 1 hour, 30 minute, 4 minute. It depends that what time frame you're trading. But looking at the monthly and weekly is the key of this game. If you're not looking at it, you don't have any idea that where 4-hour trend will be ending. For example, this is gold. What am I doing in gold here? Well, let's see the one we wanted to see, and we do some analysis along the way, right? Sai, you wanted to see, right? So let's open, for example, USDX, okay? Because that's a very nice favorite one right now. Okay, and let me open the chart also here. But let me explain this highs and lows. See, this is the first one. I just wanted to show that, what are the other studies, and then we go back. I'll go back to, and, open up this zip folder of, this is, I call it the 3 zip folders, and then you open the folders and you have a lot of details, right? So this one, and then the second thing is that, like I said, Elliott wave. So this is what the Elliott wave is. I just showed you that how price goes up and then comes down and then goes up and comes down and goes up and comes down. Now, when somebody studied the phenomena that it goes up and down with after a news in the opposite direction, let's say the price dropping, and a big support or not, but there's a news comes, and for example, the price is dropping and then NFP comes. This is a US dollar index, right? Connected to the NFP or FOMC. NFP comes and the numbers comes in the opposite direction. Then the prices start jumping. Okay, the dollar starts getting strong, good numbers. Okay, everybody wants to buy, and then the USD will start to go up to a certain level. The calculation based on the previous move, so which we don't have right now here. So let's say this was the resistance, so it goes up there. Everybody stop or taking profit, whatever the pair they're using, and then the prices start dropping, right? Again, like I said yesterday, there are this is the tool that we use to measure these highs and lows and then lengths in this MT4 is Fibonacci tool, right? And that's another different ball game because you have 3 different tools there. Actually, 2 different tools, but 3 different ways to use them. Okay, the two major tools are Fibonacci retracement to retrace an impulse move. Impulse move is what? Impulse move is which it happens. And another way, another name for that move is a motive wave. We have a motive. What is the motive? Good numbers for NFP. Good numbers is the motive. There's the news, and then what motive is that USD will get a strong. Okay, so that's impulse wave on the news. You have a motive, you have a reason to do that, and then you take it. Then here comes the reaction. Once this motive move finish, impulse wave finish, you have a reaction, retracement, not reaction but retracement. Sorry, retracement is what? Retracement is profit taking, okay, or adjustment. That everybody says, man, we went too high, or the dollar value went too much, or something like that, or just simply profit taking, and then it retraces. The prices start dropping. When the prices start dropping to a certain level, again, Fibonacci tool comes into play, and then you have two basic numbers, which I'm going to show it to you live here. For example, if I move from this move to this retracement, okay, let's do that. I'll move right here. How much is it? So you see this 61.8% line. It touches it, but it never went to the next line, and then from here it started to go up, right? This is the zone, 61% and 78%. This is the major zone. Sometimes price move from 50%, yes. Sometimes from 38% also, yeah. But the major two level, or the very common, let's say where I would say 80% of the time, the retracement come into this zone before making another move to the upside when you have an uptrend, okay? So the price making a higher high, dropping into this zone, 61%, 78%. And then again goes to make another high. So this phenomena happens, and in a certain way. How is it possible? No one knows, but that happens. It's called they call it mass psychology, or psychology of the whole, the big herd. Herd means it's hundreds and thousands of traders doing something, or same thing, same way. Same way means they all react to a positive news, and start buying something. So 80% of the traders doing something, something similar. That is, based on that, this is what happened. These moves, right? So we can call it a move. We can call it a swing. Within the impulse wave, we have swings. How many swings we have? Usually, the study says that we have 5 waves, 5 small swings. Wave 1, 2, 3, 4, 5, and then we have measurements for each one of them. That one goes, for how long or how far we measure this wave 1 compared to the previous wave, whatever it is, right? Usually it goes wherever the high and the last high and low is, and then it drops. So this drop would be retracement, which will be in the zone. What is the zone? 61% or 78%. If the news is very powerful and very, very positive, and you see a big wave 1, maybe the retracement is only 50%. And then there will be, because everybody is in the rush, buying, because it's a good news, very hard, hitting that currency. So otherwise, if it's a good news, but it's a normal news, normal good news, good numbers, then you will have a move, then it will drop into that zone around, maybe it will bounce exactly from 61%. Or what happened to that is it drops to 61%, like I just showed you, and then, so for example, this one, right? And then instead of going all the way there for the wave 3, it will go up a little bit, and then one more time it will come down to 78%. Okay? And then it will go for this wave 3. That also happens. Okay? So either it's a straight one move, and then you will see a straight up move, or most of the time you will see A, B, C correction in 3 wave, which is A, B, and C. And this A will be 61%, B will be, that anywhere between this high and this low, A. And then we will come down for a second dip, which will be around 78% of the same fib from here to here. For example, and between this wave 1 and wave 2 like this, I'm giving a number for a harmonic pattern basically. Anybody can tell me what is that pattern? When you have wave 1 and then wave 2, the first pullback A is 61% and the second is at 78% before we run for the third wave. What pattern is that? Bella, you remember? Are you listening? Okay. All right, all right. No, Mukesh, no, that's not butterfly. Where it is? That is called girdle. Okay. No, bad. The girdle has a specification that A is at 61%, then it goes up to make a C point, and then it drops to D, right? At 78% of this whole move. And this is, pay attention that, I'm mixing both things up so that you can understand that they are not different. They are same thing. It's just look at a different way. Okay. Here we see that we have wave 1 and wave 2. But you see that I made the small A, B, C. And then this from bottom to top, this wave 1 has a small 5 waves. Okay. Just like 1, 2, 3, 4, 5, A, B, C. That would make a girdle. Basically, it is a girdle here between wave 1 and 2. And then again, you will have a powerful wave 3, will also impulse wave, and will also have 5 smaller waves. 1, 2, this supposedly 3. I don't know why I have one here. It's the 3, 4, 5. I made this years and years ago, and today I just noticed that. How stupid I can get, right? This diagram is 3 years ago. This is supposed to be 3. I don't know how I made this mistake and not noticed till now. Anyway, I'll fix it. So 1, 2, 3, 4, 5. Again, 5 waves and ABC correction of this. And then final wave 5. These small 5 waves will make a wave 1 on a higher degree. For example, if you're looking at these 5 small waves on an hourly chart, and you have wave 1, 2, 3, 4, 5, and you're looking at, okay, we need a correction, man, so it's A, B, C, fine. It will, A, B, C will come down, but be aware that it's not going to go all the way down to the valley from the top of the hill. It's not. It's just a little correction on a daily, because what's happening is that this is only wave 1 and wave 2. Like this is small wave 1 and 2. And after that, what comes? Wave 3, big one to the upside. So after this whole thing up and then wave 2, you're going to have something big coming up down there on a daily chart. And it's starting, but even then on a daily chart, as a big up move will start like this. Like this, a small move. On an hourly chart. So once you notice that, on a daily, we're supposed to go up from here. We're not coming down. This is just a retracement. This is not wave 1, 2, 3, and then 4 and 5 to the down. In fact, this is just wave 1 and A, B, C correction around 78%. It's not going down more. It will go up again because that's what the daily chart is saying. And when you see the daily chart and then you compare to the weekly chart, you will see something else. And then when you see a monthly chart, you will see the real trend. Where you're going, basically. So based on an Elliott wave, Mr. Elliott said that you start doing this Elliott wave from 1 minute chart onward. Like 1 minute, find out the Elliott wave, and then go 5 minute and 15 minute and 1 hour and 4 hour and so on and so forth. My approach is the opposite. I would not start from the bottom, because when you're doing from the bottom, you don't know what really happened from the from the beginning. Basically, what was happening last month, last year, and and then you're starting from the finishing point. I rather start from seeing anything from the past, like you analyze something, and then you don't start from the beginning that this is what happened. And for example, in a murder investigation, you start doing that. Okay, well, yeah, I see the body laying on down on there, of what really happened. And then when you find some clues, then you start investigating that, who that person was, and who's his father or mother or family or job, and this and that, and and try to find the clue. And then comes up at that day that where he was, or he or she, or whatever. So looking at the monthly, the weekly, the daily, you will see that clear picture already, that where do you going, basically either up or down. Monthly chart or weekly chart will tell you that overall we are going down for months and months. So basically you're going to be going down. So it's going to be a downtrend on a monthly basis or a weekly basis, for example. So for several weeks it's going down. So if the day you deciding to trade is going to go up, then it is just a retracement. So why should you go up, right? Don't buy that pair. The idea is to go down and then wait for the proper, maybe harmonic pattern, or maybe Elliott wave count, or maybe high-end support, and some system which we have, Magic IB system, nice entry to the downside in the direction of the trend, and then you go with it. Now, for example, if monthly or weekly chart showing uptrend, and now you see that this wave 1 and 2, this phenomena here is just the opposite of this, right? So when you see that and you see, okay, it's going up, that means it's going to go up all the way. So you go and buy here. But if you are with the trend, you do that. But if you are against the trend, you don't do that. You wait. You just wait for this to finish, because you know that the major trend is up and this is a retracement. If you can identify this, you can save a lot of losses. For example, maybe I'm wrong, but I'm safe. I'm not trading EA and GA because they are going in my direction, against my direction, right? My direction was to the downside, but they start going up. Maybe it's good for them, or some other people made a lot of money, blah, blah, blah. But I'm not touching it because, there was some reason, and I made up my mind that if they go down, I will go down. There are, times that I say, yeah, okay, I will take maybe a counter trend for a reason. But to me, there was no reason for that thing to go up. Maybe something happened that I missed. Let's say, Bank of Australia said something, and then Aussie started getting weaker or something like that. Well, maybe I missed. Yeah. But, but the thing is that if you point out that, this is a retracement, wait for the retracement to finish, and then you find your entry in the direction of your analysis, or the wave count, whatever the study you are applying. You see, sometimes I apply the Elliott wave, and I send out the chart that this is 1, 2, 3, and then this is 4, and then we're going up for wave 5. Right? For example, I did that on indices, DAX and those, S&P 500. By the way, I said that a couple of weeks ago they started to come down, and it's coming down. Let's see what happens. So that was wave 5 ending, going to the upside on Dow and DAX and S&P 500. They were all going for wave 5, which is probably about to finish. And sometimes I do give you like harmonic patterns in a sense that they are easy to understand for some people. So it's okay. Wave 1, it's an ABC point is finished, and we're going for the point D, right? In case of like this, but all these harmonic patterns, they have like 5 points: 1, 2, 3, 4, 5. Now, one more thing that I'm going to explain is here that it's a lot of patterns out there based on harmonic trading, harmonic pattern, whatever. I don't use all of them at all. I only use 4. That's it. Why? Because those 4 are basically Elliott waves. Everything else is just, it's nothing. You just play with the high and lows. The numbers that I give you on my templates, that's enough, more than enough. But, you apply that numbers, and you also have an Elliott wave count. it's better always. But other than that, nothing. What are those four patterns? This is like bullish. Well, we're talking about only bullish. Okay, bullish and bearish. Bullish is up, bearish going down is just the opposite. Same thing, same numbers, same calculation. So it's a girdle. It's a retracement pattern. You have a big move and then you retrace within that move, and then you go up for another wave, and then let's say the move start from bottom to up, from X to A, you retrace A, B, C fashion at point D, and then you go up and go above this point A. That's bullish move. That's bullish girdle. Girdle, like I said, that if you have a straight drop, 61% or 78%, and then a straight move up, you never had a girdle, but regardless, you are having a wave 3, right? But sometimes what happens is that this move is not very powerful. This move is like, it's a good news, but not very good news. So you have a move, and then after that, people take profit, and then it comes down. And then they get encouraged by something, and then says, okay, let's go buy something else. And then they buy it, but the sellers are still seeing this positive news is not a very good news. Then they come in again, and then the buyer gets off, and then the price makes another dip. But the buyers realize that this move is this news is very good, and we're not gonna let it go. Okay, buy it again, and then they buy it. And when they buy it again, then this time seller will get out of the way. Says, no man, yeah, they're right. This news is very good, and we should get out of the way. And then when they get out of the way, they not only get out of the way of the buyers, they come back and they become buyers now. So you have buyers buying here, and then these sellers will also become buyers. And this powerful move, like I said, wave 3 is always very big and powerful. How big it is, how far it goes, you have the calculation, and you have specific areas. When, like, somebody was asking about when to how to identify the turn. So market can do anything, but according to the Elliott wave calculation, if you practice, you can find out very close, if not perfect or exact, very close areas of turning points. For example, if I have it here, I'm going to show you. Well, this is how it goes. Okay, on this chart, yeah, we can see it. See, this is a chart that I'm showing here, is that this wave 1 is A, B, C, and this is like a girdle, right? Girdle or a bad pattern. I'll explain that later. The bad pattern is just like a sister to a girdle. It's a little bit of different calculation, but it's the same pattern. It's wave 1 and 2. It's either a girdle or bad. The calculation is the same. Sometimes this point D here and a girdle, it goes down below 78% to the next level, which is 88.6%. Then we call that a girdle, a bat. Simple as that. But that is still a wave 2. Wave 1, wave 2, followed by wave 3. Okay, simple as that. Now here you can see the wave 3 is equal to 1.618% of wave 1. This is how it is. That question yesterday, this is what the answer is, that you have everything calculated. For example, if you're dropping after a big move, you see that clearly that there is a big move and powerful straight up move, and then you slowly retracing. That means that's an impulse wave, motive wave, and then you're coming down for a retracement, and then you wait for either one of these points. Now, let's say it hits 61.8% and start to go up, and you make an entry here, long entry. But be very careful, because it will go up there and then it can come down again 4.618%. Okay, for point C. So if you be careful, it will go up enough to give you a room to bring your SL to your entry point. And then if it comes down and take your SL out, fine, thank you very much. You don't make anything, but you don't lose anything either. And then you wait for 78%, and then it hits in this area 78% or maybe 88%, and then it started to go up. You go get in again, and this time you will fly with the move if it is really wave 1 and wave 2, right? This is what you need to learn, that how to identify wave 1, wave 2, and that comes with practice. But this wave 1 and wave 2, basically this harmonic pattern, this is the zone, 61% and 78%. Now, this is called 1 and 2, how far this wave 3 goes. You don't measure this wave 3 with the same retracement tool. You now use a different tool, which is called Fibonacci Expansion. I'll show you in a minute. And then it says that that will be 161.8% of wave 1. So this wave 3 is much bigger than wave 1. But then you have wave 4 coming in a different shape. Most likely it will come in a triangle, which is very nasty thing, and you should stay away from that at all cost, at all situation. Just if you identify that it's making a triangle, just don't trade that pair. Stay away from it until it finish. But usually it comes and drop to 38% of wave 3. You all should have this diagram as well, right? Because I think it's a part of the subscription package. So open it up, print it, and keep it in front of you. Post it on the wall. It will help you. If you don't do it, you forget these things. Okay. So wave 3, after wave 3, wave 4, it could be a zigzag, which is another way of retracing. I don't want to get involved right now with that, because then the video is going to be much bigger. So either zigzag, or this is called flat, where this move A is equal to C. It's A, B, C. They are all most likely equal, but this high is a little bit lower than this, and the C sometimes go a little bit below than A, and it makes a point C. This is a flat. Usually the measurement is, when you measure this, 38%. Let's see if I can find out something. Let's see on a daily chart that I can show you. For example, this if I see this up and see A, B, C correction, very nice correction, like, and let's forget it. I'll do it again. Okay, I'm gonna move. I move that, and this, what is this? USD daily. Okay, hold on. Why bother with that mess? USDX, right? USDX daily and plain. We got that. We are here. Clean chart, right? So we can understand much better. Okay, so let's take a look at this one. I want to show you this move. So this is what it is. We use this move. We use retracement tool, which is this one. And then you notice that first pullback was 50, and it's very close to 61%, right? And then it went up and then came down again, and we're very close to 78%. So it was a little shy of 61%, a little shy of 78%, but it's sort of a gauntlet, right? And this is the zone that it finishes up here, basically between 61 and 78%. So this wave 1 and 2, then you need wave 3, and it should be 61% of wave 1. How do you measure that? Okay. This is the expansion tool. Sometimes you're not going to see it if you open a new MT4, but for the new people, I will show you. See this retracement tool? You will see that one, right? So you right click and then go customize, and you have more tools on the left. Okay, so bringing some tools out here in the action line, you need to click that and then say insert. It will go on the right hand side. For example, this, let's say Gann grid, right? Or Fibonacci fan, for example. I don't have it here, right? But I want it outside so I can use it. So what I'll do is Fibonacci fan, I highlight it and insert. It came here, right? Now close this window. Right here is the Fibonacci fan now. I don't want it, then I can just simply go there, Fibonacci fan, and I remove it. Okay, so it will just get out. So this tool also is hidden. You have to take it out. Okay, this is expansion. How to use it? It has 3 points, like the other Fibonacci retracement has only 2 points, A and B. This one is 3 point, and you're starting to measure from here, point A. This is point B, and point C, because you need to measure this move, but you need to measure this compared to this, because what we have data is that wave 3 should be 1.618% of wave 1, right? So compared to this, so you have point 1 and point 2. So this is comparing and starting from wave 3. Where does it go? This is 1.618, and this is a little bit bigger than that, higher than that, right? 178, but it has fulfilled the prophecy, right? It went there. Now, if you measure, if you think that this is basically wave 1 and 2, because this is also same phenomena, so it's like 1, 2, 3, right? Then you see, so 1.618 comes here, and then it went to 224. This is called extended waves. You know what happened is that normally that's what happened, what I just explained, but usually it goes higher. Now, even if this wave 3, for example, as I mentioned you that this can have a small 5 waves, for like the 1, 2, 3, 4, 5. You see it clearly here, right? Let's measure this. That if this is 1 and 2, wave 3 is how we touch again to compare to this one. This one is wave 3, 127, and a little bit of a dip here, and then it went up all the way to this area again. When we measure this here, this one, according to this measurement, was also in 1.618 or 1.786 area, right? This is like a zone. Like a retracement, we have the same zone, but it is 61% and 78%. This is 100 plus 61% and 78%. Okay, 1 plus 61%. So it's just, this is called extended. Okay. You will see that not the same tool, but the other tool, other way we use for butterfly patterns. But we may not be able to cover that today. All right. Because basically it's a big topic. It needs several things. But I just wanted to just touch bases that first system that we have, what you do is highs and lows on every chart. Monthly chart, then weekly chart, then daily chart. Basically, I use monthly and weekly numbers. You know that, right? For example, here I made my monthly chart and I put these bullets here, and the numbers. And we know what it is, right? And then weekly chart, do the same. So you have some more. Like a monthly chart will give you one swing, will give you one high and one low, right? Weekly, you will give maybe a couple of more highs and lows within that one move, right? And daily will give you a lot, but monthly and weeklies are fine. And so far here you can see that how we were playing around. I don't have a chart, previous chart open here, but I said when the price was here, I said we're gonna drop here, then go up and then drop. We're doing exactly, and going up, even dropping. See this zone, white line. I said we're gonna drop here, right? Between these lines. These lines are 0129 and 0219. Where is it? Yeah, right here, 0219. So these are the two big highs, and price drop here and then bounce. Where it go? This is the big high, and then this one stopped it, which I already said that we're gonna go up here and then we will drop, and from there we'll drop. So this is highs and lows working with the trend line, and see this trend line here. So now we are coming to that line here, and see this thing stopped here because of this trend line. Even though it's not a proper trend line, but it works. It started from here, connecting the second point here. It went up, touches this trend line and dropped. So everything is very symmetrical, and if you very harmonic, should I say? And if you do keep doing the calculation and then trend lines, you can find these turning points. Okay, it's a little bit tricky, but again, like I said, that this is what I do in the webinars, teaching. Because if you don't teach, if you don't learn then there is no way you can do this thing successfully. If you just press buy and sell button hoping that you make some money, you will end up losing, because it works. This whole market works against your brain psychology. Okay, and the biggest factor that make you lose money in this is fear. Fear, both ways. Let's say if you are in losing, then you have a fear of losing, and you want to wait until you come out of that situation. Okay, or you're hoping that, man, the price is dropping, you keep losing, and you're hoping that it will make a turn. Or you don't want to close the trade because it will, I mean, make you lose, right? If you're losing $200 and the price is dropping, you want to wait so that it will come back, and that your mind says, yeah, it's always, make waves, so it will come back, and then it goes down again and again and again, and then finally you get sick and tired of it and you close, and the minute you close, it starts going up again. Okay, so it gets you either way. Now, if you are in profit, what happens? I'm making $100. If you see a little candle start coming down, for example, you're going up, you are profit, making $100. The candle start dropping, and it says, you're going to lose the profit. Man, this market is going to take away what I have now. I'm making $100. If it comes down, I'll lose what I have with no profit. Might as well close it. You will close that very quickly, right? Immaturely. And then the price will go up again for hundreds of pips. And you're scratching your head, why did I close? So knowing this, what will happen? Knowing this, that this can make a turn from anywhere. Let me show you guys another diagram, which is very interesting, that I made a long time ago here. This is what it is, okay? This is how it is. And the move starts here to here, right? And then all of this can happen. It will go up here, it will be wave 1, then it will drop wave 2, and then go straight for wave 3 to the upside. Or it will go up and then drop and then go up here for like if you consider this move, like yellow count, this is XA, then you drop for B and C, and then you come down for a butterfly pattern, which I haven't discussed here. Butterfly patterns are extended patterns. They go beyond the ending point of the move. Let me just show you quickly, because I show you that it's a bullish girdle, it's a retracement pattern, and bullish butterfly, it's an extended pattern. Means this move is not going to stop here and then it goes up there, but instead this move will continue going beyond this point, start at the beginning of the move, and to a certain level. Those levels are 127 and 1.618, as I told you in yesterday's webinar as well. And then they look like this. Butterfly. This is a girdle, right? And just the opposite of this. I want a bullish. Here, see the point, the D point, it didn't stop here, and the move didn't go up. Move went up, but after going below this, and D point will finish now either 127 or 1.618. And then this pattern called bullish butterfly. Now the first one, the girdle, is this would be wave 1, and this would be correction 1, 2, 3. Now in this pattern, what's happening? This was a part of a correction, some kind of correction in the background, and this was wave 1 and 2, and now you're going for wave 3 to the downside. This will be 1.618 if you use the expansion tool as a 3-pointer, which I just showed you, and this will be 1.618 area. But in the harmonic pattern, we say is 127 or 1.618 of the same tool of this retracement tool. Okay, so if you're doing the harmonic pattern calculation, you use this technique, and if you think that okay, it could be, let's see how much it goes. It for 100%, AB is equal to CD. It could be just 100% or 127 or 1.618, like here it says. Then you use the other tool. For example, let me go and quickly for example, this one, let's say, what's happening right now. If this could be a correction, okay, hold on. And in my daily chart, I like to give practical real-time examples. Oh, by the way, this is, you can see that this, I made this a harmonic pattern. This is the same chart, USDX daily chart, and this is the second version of this. So I'm showing here that this is a correction right now. It's A, B, C, right? And then after getting here, it should make a turn. But if it doesn't make a turn, then I would say, okay, this was not a correction. This may be wave 1, wave 2, and this is wave 3 all the way 1.618 to the downside. Time will tell, right? We don't decide that. So what we do is we will find the starting point, and then we do trades accordingly, and then wait for the next level. But we do it on a daily basis. Why? Because the next day, anything can happen. You're thinking that this is a C point and should come here, and then you're holding on, and then the evening comes and the market closes, you go to sleep, you wake up and find the price right here. Dangerous. Okay. So what happens is that if you're a proper trader, and if you're like a full-time trader, not proper, a full-time trader, and if you know the timing that what I teach you, this Frankie Open, London Open, the volume comes in, you will have the move, and you enter early, then you will get the most of the move, 80, 90, 100 pip, and you know that the target is here. Fine, this is a daily chart, but you're not gonna get here in one day. You will come here, maybe you'll go back testing the C point again. So what if you make an entry here and then it go back up against you for maybe 100, 150 pip? You don't want that to happen, right? So we not only we have a system, but the technique is that you make an entry, you are positive. Daily range indicator also tells you that how far we move daily basis. And when you are close to that range and you are in good profit, close it. Don't be greedy. Close the trade, but the pattern is still there. So it will retrace a little bit. Again, wait for the retracement, and then you find out that, okay, 1.618, extension, and then 0.618 or 7.786 retracement. And again, the next day volume time comes in, and then again you find your entry, and then again you make an entry, and then again you make profit. Okay, so these things are just showing you the harmonic pattern, Elliott waves, that and support and resistance, that if one area, like I said, I just showed you on a weekly chart here, that let me show you if I have it open here, no. I want to show you the same chart from this beginning. Indexes, USD. Here, see that? So from here, it will start dropping, and then this is the target for this. So as long as this thing is keep coming, and then I said it's going to go up here, and then from here it will make a turn. Why? Why did I say that? There has to be a reason that I said, well, from this point we will make a turn. And there has to be a reason. This is again the question from yesterday. Then how do we find the turning points? This is how. If you understand the whole thing, if you understand or learn it, and this is, if it's not rocket science, but it's not easy either, you will have to spend some time and effort, but you can be able to do this. And I'll ask you, all of you, to find out if anybody in the whole market, I challenge you, in the whole market, anybody predicted the USD drop like this. You're not going to find anybody. And if you do, send me the chart. And people were actually surprised that why USD is dropping. Come on, it's right in front of you. So I did the same. I made this chart, and what we have today is this. exactly step by step. That is what I said here. What did I say here? This is what it is. If you learn, it's powerful. You will know exactly at any given point where the heck you are in the market and what is the, I make mistakes, you will make mistakes. But if you're making 80% mistakes and you are right 20% of the time, no, you don't want that. You want 20% mistakes, okay, but 80% of the time you want to be right. Okay. So, like I said, I consider this. If you have this move and then the prices start going up, don't think that's going to go up all the way up, because you have this many of possibilities. It can go up here, drop, and then start going up, and then all the way go up, stop here, stop here, stop here, or it may come down and then go up, right? Or it may not go up at all. If it will go up here, if you count this yellow, it will here, then it goes up, B, C. If it's not going above this point, then it will drop, and if it breaks this, it will go up where? 1.619 or 127. Sometimes it will stop. It may stop here. This is a big market. It can do anything, right? So we have to be aware of these points all the time. Market can move in any given moment. Any news comes from outside. This happened, that happened. He said this, she said that, and the market will react. But fortunately, the market always reacts in a very harmonic pattern. Harmonic way, actually, not harmonic pattern, Elliott wave, or, and highs and lows, and at one point to another, one point to another. Okay. Right now, if you notice that where we are stopping here has to be, one of these points, it's USD. We dropped here before, right around this area. We went up exactly, I think it's 01 something. What is the measure? Let me measure this. See this drop here? 0188, right? And we have this high here, 0144. One of these highs maybe around 88. And then, from there it went up. This number is 0698. We have another high here. This one is 0700. We went up there. We poke into a little bit. We 0723. 23 pips higher than this one. But we regarded actually this number here, this high here. And it stops the move there and then drop. Now it's coming. So why do I have a TL here? Maybe TL will stop it. You never know. Maybe the news, by the time it comes here, we will get a very good news for USD, and then USD start going up. But coming down here, and then when he's hanging around here, and then you get another bad news, or another, Yellen comes out and say blah, 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 drop. It's going to drop. That's what I'm expecting, because that's what it's doing Elliott wave wise. If I consider the Elliott wave, this is a correction that we must come here. But I could be wrong, the study could be wrong, and what the hell with the study, this market can do anything, right? So sometimes, not all the time you can apply these studies to the market. Some markets, me saying the market means like some pairs, for example, maybe Euro USD, Pound USD are doing very good, but Euro Aussie, Pound Aussie, USD CAD are completely messed up. No study you will see there. You will try to see some harmonic patterns. You're not going to find one. Elliott wave doesn't make any sense. Nothing is measured. All chaotic moves. So what do? Leave them alone. You don't want to touch those things. Like I said just now, that if the fourth wave triangle, run from there, because it has 5 legs. 1, 2, 3, 4, 5. Up, down, up, down, up. You go crazy trading that. By the time you see that it's going up, you go at it, that's the end of it, and then it's going to come down. You'll go short, it's going to go up. You'll go up, it's going to come down. Then you'll give up, and then it will go in one direction. So people get caught in that triangle. They don't even know if it is a triangle, and they just keep doing that, and they will. Even though that triangle comes after the third wave, right? So you are in a third wave, you made a hell of a profit, a lot of profit, but you fall into the triangle and you're doing the same trading, you will lose all the profit you made in the wave 3 plus more. So if you see it's a very powerful move, you've made good money for next couple of days, don't touch that pair at least, because it's going to fall into the wave 4 correction. Do something else or not trade. Wait for the wave 5. So if you understand that highs and lows ABC correction, you say, okay, man, you know what? Let it finish the correction, then I'll go in. So yeah, that's what. So that's what Euro Aussie, Pound Aussie. Maybe it's a correction, maybe it's a big move out there, but to me was like if they would go down, I will go down. I will open a trade, but right now I'm just watching it. And if it's a move to the upside and it will continue going up, then maybe next week I will start going long. If they're not coming down, then I will say, okay, I was wrong, but I didn't lose any money trading against. If they're going up, I wanted them to come down, go down. They didn't, so that's fine. I lost a couple of SL, a little bit. That's it, no problem. But when they give you a good move, they give you a good move. Okay. So these are the three, basic studies. Like first one, Elliott wave. Second, you can say harmonic pattern. And the most easiest way is these are horizontal, support, resistance, trend line, and channels. Now, basically, if you want to really understand each one of them, then I must have to do webinars, maybe one or two, completely separate topic. For example, start to finish on the first one, so it's, support, resistance, and how to do it from the beginning. How to open a chart, how to find out these numbers, match them, and then try trend lines and horizontal level, and then use IV system to make entries on the pairs. And then Elliott wave is a long subject, as well as the harmonic pattern also. It's a long subject. So I just wanted to give you a little bit of like a basic idea that these are the three studies, and we measured them. The question actually was that that's what I said, that let me do the webinar and show you. We use these tools to measure these highs and lows, and plus if you have these horizontal levels, trend lines in place, and then highs and lows numbers like this one. I just gave you an example that if I made this chart on basis of what? Knowing the same thing, numbers. These numbers, horizontal numbers, I said, so we're going to come down here, we're going to bounce up there. Also the measurement. If you measure this move from here to here, you will see what it comes to. It touches this level exactly in the center of 61% and 78%, which is 70.7. It touched there and it went up. But it went up to how far? Turn this tool around and you will be surprised here, 61%. And from there, it started dropping. So these are the numbers always. This is how you keep measuring and then you keep trading accordingly. This 61% coming exactly with the confluence of this 0698 and this high here, 0700. 23 pip, it went up, no big deal. Right? After all, it went down. Right? On a daily chart, you can see how nice it is, 23% line. And this is a harmonic pattern calculation. I says, well, this is XA, this is point B, that's 50%, C, 23%. And in that case, it usually comes to 88%. This is how the bad pattern calculation is. I didn't discuss that in this webinar, but this is how it is. So, everybody is sleeping or gone? I don't know. There's no question so far whatsoever. I know this is a very dry and that subject. So, but maybe it's good for somebody, right? Ted is here. Yeah. Okay. Good. Okay. 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 Arshad, you like it? That's good. That's good. If you like it, that's it. Oh, Carmen. Now everybody is popping up again. Oh, so everybody is here. I thought everybody's gone because everybody's like, quietly listening. And I was like, I wasn't given any break because I wanted to cover as much as possible. So I was kind of a little bit fast. You know, so I told you in the beginning that I'll be fast a little bit, you know, but if you can understand something, you can always, you know, interrupt and tell me that, you know, buddy, slow down. But I can do it again and again, no big deal, you know. But like I said, next time maybe, you know, one by one, then, you know, for example, uh, Elliott wave is separate, and then, you know, one day completely Elliott wave, and it's too many things in Elliott wave. But I stick to the basic, like I said, impulse wave, react, and correction, ABC. If I see clean something, and it's a lot of pairs doing the exact the same thing, like this one here, right here, right? But and maybe then in the next webinar I can show you practically live that, you know, this pair is doing what, this is making this wave, this is making this pattern, and these are the calculation. And then, you know, based on, and basically this study that I give you all these highs, you know, all these things, you know, I made this when it was go here, I made the chart that is going to go up here and then drop, and look what's happening so far. You know, very, very nice. Right. Yes, Kamil. Elliott wave is, you know, it's, that's what I'm saying. We are not here to do PhD in either, you know, Elliott wave or harmonic patterns. We are here to see how we can make profit out of this market, right? So what we need to do is we need to learn enough to be able to understand the turning points. That's all. That's all. So that's why I said that I use harmonic patterns, but only four of them. And basically there are two, but, you know, different, like brother sister, brother sister. Girdle sister is bad, butterfly small, sister is the butterfly bigger one, at one end at 127%, the other one ends at 1.618%. That's it. Okay, X, A, B, and C point are the same in butterfly, but D, one ends at 127%, one end, you know, same thing. So basically two patterns. And if you learn that, plus a little bit of Elliott wave, to identify wave 1 and 2, and then see if it's going up, and then immediately go on a 40-minute chart, see what's happening. And if 20-minute chart, you find your entries and short, 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 continue. You know, it gives you confidence. It gives you definitely, you know, definiteness. You know, basically that, you know, you are 100% like confident and definite that, you know, this thing is going down, man, because I saw the Elliott wave is there, I saw that, you know, harmonic pattern is there, I saw you know, the monthly high and lows, and the trend is right there, and this is now turning to the downside, and it should go, you know, this far if you do the calculation right. And then taking the entries is the easiest part, basically, and you use the magic IB system and you'll be able to, you know, do it properly. That's especially good. Okay. Okay. Good. 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 Neelam is asking how does the indices direction affect the pairs. To be honest with you, I don't trade much the indices. I just do the analysis for. Um, but if you're asking the individual currency indices, or you're asking about the your like S&P 500 or the DAX 30 or indices like that. That's why I call the currency indices, I call them index, like USDX index chart. So are you talking about the index chart, Neelam, or are you talking about the S&P 500? Okay, individual currencies. So you're talking about indexes, right? You can call it indices, but, you know, then you have a confusion. Okay. Okay, now how does they affect? Okay, let's say you have all the currencies, and in that today, for example, you know, the NFP news is big news, right? Usually it comes to the first Friday of the month. NFP is a USD news, right? US data, and that will affect USD, not any other currency, right? So it does, but, you know, for example, you know, it's USD, and then USD will get affected when the numbers are either you know, better than expected, or, you know, worse than expected, something like that. The USD will react. For example, the numbers are good and USD will get it strong. Okay, so this is a USDX chart. So you will see the USD index start bouncing, going up. That when the USDX going up means the USD is getting strong. Okay, now here's the part. USD has 7 pairs. Euro USD, Pound USD, Aussie USD, Newsy USD, where the USD is on the right hand side. Remember this, write it down in a note. When and the now because of the news, USD is getting strong. So if the currency getting strong is on the right hand side in the pair, that pair will drop. Okay, write it down. And just the opposite, vice versa. Means if the this index is dropping, right? So go and check what happened on the Euro USD and Pound USD. They're flying right now. They're going up. That's what happened. USD index dropping means USD is getting weaker. If USD is getting weaker and the other currencies are not doing anything, for example, okay, giving that they are stationary and only USD is moving and USD is getting weaker, then they will fly. Which pairs? Only the four: Euro USD, Pound USD, Aussie USD, and News USD, right? Because USD on the right hand side. But the other four, other three pairs where the USD on the left hand side, for example, USD CAD, USD franc, and USD yen, USD first comes first, which is on the left hand side. These three will go down. So while USD is doing this, if you go and take a look at what the USD yen is doing, now you're not surprised that that's what happens. That's supposed to happen. And while USD is dropping, you go short on USD yen. Okay. For example, look what happened to USD yen. On a 20-minute chart is, how many entries you had. I know I traded this drop and I traded this drop to here and I left it alone. For what reason, I don't know. but these two entries, but you had more than that. Usually I don't trade this pair. But I see a nice move coming. It's okay, no problem. Few dollars from here too. Okay. But if the both currencies, like you asking now, that if both pound and USD indexes are going up, you heard probably this thing that called ranging. That's what happened at that time. Ranging. If both currencies are going same times, they are going up or down, means except the yen, because yen index works the opposite. But like you said, that if pound index is going up and USD index is going up, then pound USD will not go nowhere. It will just with 20 pip range, going up and down and up and down, ping pong. Okay. You have to, and the pair which moves the biggest and the fastest is when you have one currency is getting strong, the other one is getting very weak. They go in the opposite direction. So that's where you have that pair. For example, right now, what happened to see, while Aussie is getting weaker right now, right? Yen is getting strong, right? So if Aussie getting weaker, yen is getting strong, then what should happen to Aussie yen? Aussie on the left hand side getting weaker, yen is on the right hand side getting strong. That should tank, right? Let's go take a look if I'm right or I'm wrong. What happened here? Look at the 20-minute chart. Well, it's not a current chart, but and I'll show you one more thing. Let me refresh this chart and see. Man, I missed this move. Anyway, I got too many things to do, man. So no big deal. I gotta close the webinar. It's going to 94.63. Let me see, 94.63. How far? And probably gave you 94.63. 94.63. It probably gave you so many entries, man. Oh, yeah. And I had a weekly chart that is gonna drop as well. See, this is what it is. If you had paid attention to this pair, you will, well, not too many entries, but it was enough. Here, see, it just dropped big time because of this. And let's see if you had a 40-minute entry. Basically, it came out of this number, 87.50. This is what it is. This is your entry, and 87.50. If you go and take a look at this, this is a big number. 87.50. Do you know where it is? I mean, I don't know where it is. Where'd that number go? 87.50. I know it's a big number. What was the number? Weekly high, 87.50. This is 88, this is 86. It has to be in between. Oh, I didn't write it here. Is this the one? 86.69. Maybe this one. This is 87.06, and this high is 87.52. 87.52 is this high. I forgot to mention this one, right? But see, this is the chart I gave you that it's gonna drop from here. So it was going up, 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 and now it's to start dropping. If you don't have it, let me show you real quick. This is a monthly. Where's the weekly? Okay, that's the one I gave. It went up there in that area, right? Around 50, 87, 66, 50%. And it's supposed to drop from 87, 66, my number, right? And it dropped from where? It made the high here, 88.16. Not even 100 pip high it went. And then finally it's dropping. So this is what the power of this analysis, if you understand. Aussie index, okay. Let me show you quickly Aussie index. Aussie index, I was expecting that it will go up, get strong, but that number I'm giving you, I remember that number, 57.41. Just watch. See, I remember that. The stupid thing is playing around with me. You see this? 57.41. How many candles hit this number and drop? 1, 2, 3, 4, 5. This is the sixth candle. I was expecting that it's keep hitting and keep going back there. So this time it will go back again, and then maybe this time we'll break it and then go up to the. I was expecting this number here, but unfortunately it didn't happen and it's coming down. So I'm gonna wait till if it comes to this white line here. But the bottom line is that the Aussie index is on a daily chart. You can see how nicely it's big time is dropping. 4-minute chart. The Aussie is dropping. Aussie getting weaker. Yen is going up. Yen is getting a strong. Aussie yen tank. Simple as that. No. Yen. Oh, that's what I'm saying. The yen index is just the opposite. Always remember that. You have 5, 6 currencies. So the basic rule is that when the index goes up, currency gets strong. Index goes down, currency gets weaker, right? Yen is the opposite. The reason for that is, let me show you this. See, Aussie LFX, right? And everything else you see that the currency name first and then LFX later. But in case of yen, you will see LFX JPY. Because if LFX is going down, yen gets strong. When it goes up, yen gets weaker. Pay attention to that always. Okay, always remember. It's just the index. I don't know if that's a company code word or something. It's it's next to everything. What did I do? Oh, here. See, this is yen. Now, yen chart also, if I can show you, yen index is where? Here. This is the chart, not this one. This is the chart I gave you on March 13, that is supposed to drop from the trend line. If it goes up, then I want to see above this white line here, 56.09. Then I will say that, okay, now it is going up, and then it will be the target will be 58.26. But so far, I see it even if it's a bullish style here or bullish flag, right? But it's keep coming down. So my take was that we're gonna drop from here to this area, and so far until yesterday, this is what happened. So we drop basically, right? And if you can see the 40-minute chart, you will see this drop here, and the 20-minute chart, you will see this big drop here, right, to this area. This is a big area, 54.73. That's where we are now. We're trying to break it. This is a very big area. This is the number, 54.73. So yen is dropping, and I have even a monthly chart as well. Let me show you here. Not this one. See, the monthly was showing this. In fact, go back. See, from here, I said we're going to drop here. It should drop here. Monthly, it was a long time ago, in January, right? And as of today, it is coming down nicely. And we are at this number. If this number holds, we may go back up again. Okay. Remember my strategies. If then strategy. One by one. We don't know. We don't have a crystal ball that, this must happen. No. If we go down for some reason, if you break this number, then the bottom number. What is the bottom number? These are small numbers, but the big number is 52. Okay. When it was dropping from here, I step by step took it all the way down to this number. I predicted that it's going to go all the way down to 50.68 and bounce. And then it did. I have all the charts in record. And then I predicted that it's going to bounce from here to this up here. And that happened. Okay. And now I said we're going to drop to this white line here, at least 52.52. So while it's dropping, remember, yen is getting strong. All the yen pairs will go down. Okay. But if something else gets strong, let's say pound will get strong, then pound yen is not going to move. Then you have to find something else which is getting weaker. Right now, it's Aussie. So Aussie yen is dropping. What channel are you talking about? 4-hour index direction inside channel. Yeah, well, actually, you just look at the 4-hour, 40-minute chart. Yeah, that will give you a nice insight to what's happening. Let me show you the pound yen quickly. Then I'm going to have to close because it's an hour and a half. I don't want to lose the recording. So far, yesterday I did a big one. I think it's like hour, 20 minutes, and it worked out fine. So, okay, see the 40-minute chart. This is what I said yesterday. That I tweeted a couple of times that the pound yen setup is there, and the setup is still there. Why? Because we start ranging. Why? Because pound is getting strong and yen is getting strong. Both. Look at the pound. USD is flying because of the pound. Pound is also getting strong, and the yen is getting strong. So this is what happens. The setup was there, beautiful setup, but it didn't work out so far. Okay, so this is what it is. And the rest we'll talk later sometimes. Maybe I'll make another webinar, or, keep talking like that. And Oh, Twitter, you don't have it? Okay. It's always, remember, my emails, it's in there. But anyway, it's at my Forex Magic Wave. But at the last, you don't have E there because of the limitation of the numbers. So wave is without E. At my Forex Magic Wave without E. Okay. So that's what it is. I don't have any Instagram or anything, man. I'm too busy for that. But yeah, Twitter is, that's what it is. So just connect with the Twitter so you can get the tweet once in a while. Okay, Twitter is at my Forex Magic Wave without E. Okay, so I'm gonna close it now because it's 5:31. The time is no, not X. Why you have X in the beginning? At the sign of at. A. Yes, okay, you got it now, Bernard. Okay, so connect and then you will see it. So hold on to this today. This week, like I said, it's not good for me, to be honest with you. I just made some money. In the beginning of the week was fine, but yesterday And today, yesterday was just only one trade, man, and today is just so far nothing. Okay, so maybe I'll get lucky tonight, make something. If not, then overall the week is positive, but just today is not good. That happens, you know. Anyway, so I'm gonna close it now, and if I think that yeah, okay, maybe I'll throw another webinar tomorrow. And tomorrow is Thursday, Friday, and then Saturday and the Sunday. I think that there is a need to do more and more webinar like this, the one that I did. So probably we're gonna do it a few more soon. Okay, back to back. So for now, bye everybody. Have a great weekend coming in. Not here, but my weekend start from here because my the schools are off tomorrow, so the kids not going. So if the kids have holidays, my holidays. So we have a long holidays, Friday, Saturday, Sunday, starting from now. Okay. So this is how it is. So bye for now and talk to you guys later.